Aloha, YouTube investors. How is everybody doing today? My name is David Yanson. Welcome to my channel. Today is February 25th, Thursday, 2021, and we're going to be looking at ticker symbol CRM, Salesforce. In this video, they had a really good quarter and a really good year. I personally really like this company. I wish I owned more shares of them, but I do have a small position here in my Robinhood portfolio. If you are new to the channel, I do have three main brokerages that I use. Robinhood is my growth portfolio. M1 Finance has my Roth IRA, and then I have an individual account, which is kind of more of a dividend growth portfolio with Fidelity. So if you care to check out those videos, feel free to do so. And please subscribe to the channel and leave a like. There's a thumbs up like button where you can hit liking my video, and feel free to share with your family and friends as well too. So thank you to everybody who's already subscribed, continues to follow my channel, support my channel, and like my videos. I really do appreciate it, as it really does help support the channel, helps the channel grow, and you're a part of it. I really appreciate it. So my Robinhood portfolio, not up at the 34% like it was in last week's video. At the end of the week, I usually do a winners and losers video. This week, I probably won't do it because it will be March next week. So I'll do how did my three portfolios perform for the month of March video. But in last week's video, this was up about $900 or $1,000 and 33%, somewhere around there. Now it has dropped down to 24%. The stock market has been, you just kind of never know. That's why I tell people to do your own research. I'm not a financial advisor, an accountant, or an economist. And the stock market can be risky. So traditionally, you don't want to invest money that you need for other things, like maybe your car payment or your house payment or food or clothes for the kids or something like that, because it shouldn't be for gambling. It should just be for investing extra money. Now, if you sacrifice to invest in the stock market, but all your essentials are taken care of, that's a different story. But as long as the essentials are taken care of, you can still make a lot of money in the stock market, and you can minimize that risk with the holdings that you choose. It just depends on your investment strategy. But with my investment strategy for Robinhood here, it is a growth portfolio. Like I said, my Roth IRA is a lot of dividend kings and dividend aristocrats for dividends payments, and dividend more geared to dividend growth with my Fidelity portfolio. So I have a little bit of Salesforce here in this portfolio, and as you can see, the stock market was down today. This week has not been really great for the U.S. stock market, and the month of February has been pretty fickle as well too. But when there's a down day or a down week or a down month, I see that as buying opportunity. So like I said in my other videos in September, stocks are on sale, when you buy the dips. That's what I try to do. And because now Salesforce lost so much throughout the day, at the end of the U.S. trading day, it was down almost 4%, almost down 5% in after-hours trading. This is a good buying opportunity depending on how you see this stock might go. My personal opinion, I think it will rebound. It will rebound with no problem. My personal opinion on why it kind of dipped, I think that people take profits when they see and read or hear of a good earnings report, so they take profits off of it, so then the stock drops down, but then it recovers. So the question is, do you buy at the price that it is right now, around this 219? If we go back 1 month here, you can see it was all the way up here at 249. Do you buy it at 249? As a new investor, do you buy it at the price that I said, or do you buy it around this 231? For me personally, my opinion, I would like to get this down below 227 per share, because I would love it if this stock ended up way down here. Let's go back 3 months. If it ended up way down here around $200 to 220, 200 to 220 is basically where I would like it. Not just because the PE ratio is really high. It's got, it's a $200 billion market cap, but there is a lot of growth, and there can be a lot of risk with tech companies. And Salesforce isn't new. They were founded in 1999. I like their CEO. He's very aggressive. He's got a target on Microsoft's back. He wants to take them down. I like that. I like that he just didn't put out a blanket and say we want to be the number one in our region or the number one in the world. He said we want to knock off Microsoft. So, and he's focused on that. That's what he wants to do. So for me personally, my average cost per share is $227. So $219 is very nice for me, but it is a financial situation decision for me as well too. If I have the money, because there are some other companies that I'd rather invest in that pay a dividend. Salesforce does not pay a dividend, and they probably never will. This stock price could still go back up. They are a part of the Dow Industrial Average, so any fund that holds that tracks the Dow Industrial Average, the Dow Jones Industrial Average, will have Salesforce in their fund. So the Dow was down today, so that causes this stock to fall a little bit as well too, or maybe it's vice versa. This stock falls and all the other companies fall a little bit, and then that fund falls. So, but if for some reason a company decides to, or fund manager decides to add more of Salesforce to the fund, put some more shares in the fund, then the stock price could go up. Or maybe people, like I said, took profits and now they're going to say, okay, it dropped down this far, it dropped down to 219 all the way down here, and my average share price was, depending on when they started investing in it, was at 167 or something like that. Just throwing that out there. They might hold, they might not want to buy some more. But if they're like me and their average share price is at 227, because I originally started buying into this company when the stock price was going up, and I knew that, but then it kind of leveled out, and so I started dollar cost averaging with it. So if you're like me, my personal opinion, try and get in at the 200 to 220 mark, but if it's hovering there. So you see, day after day it's staying in that 220, 219, 221, then you might want to add a couple shares. At least that's my opinion, and that's what my strategy is if I have the money to do so. But let's go ahead and look at their earnings. Let's go ahead and see how they performed for this year and for this last quarter. So I'm using Alpha Street here. I use this website in a lot of my videos. They don't always put this graph together, but they call it an infograph. But I do like it when they do it for the companies, and those are kind of the videos that I kind of gear towards, just because I like how concise and put together this is. You're just not looking at line after line with number after number and trying to track it with your eyes. Those smaller lines, if you know what I mean, especially if you're like me in your mid-40s and you're wearing glasses now. But anyway, revenue came in up 20%, almost $6 billion at $5.82 billion. And Salesforce did hit a goal that they had set. Their CEO, I can't say his name. I know his first name is Mark, but his last name I have a hard time saying it. But the CEO did set a goal for sales for the company to be $20 billion for the year, $20 billion in sales. They did reach that goal and beat it by a little bit. So that is a nice accomplishment for the company. They are profitable as well too. So they're a growing tech company that is profitable, that is in that cloud servicing area. Their net income did do better than previously as well too. Loss previously was $248 million, and this time net income came in at $267 million. So everything's kind of picking up revenue-wise for them. Of course, with the stay-at-home economy and some people, some companies saying that you can work from home permanently or you can work remote, permanently and stuff like that. Salesforce might be one of those companies that has more people working remote, so that helps reduce costs as well too for other companies, and so they probably want to pick up services that Salesforce has to offer, because then you don't have to worry about pen and paper, pencils and things, supplies, office space, and things like that. So breaking down here, Alpha Street always kind of breaks down their segments here. So subscription and support by revenue. Sales up 8%, service up 17%, marketing and commerce up 27%, platform and some of their other areas up 28%. So really good numbers there altogether. Geographically, as far as the revenue performance is concerned, Americas brought in $4 billion, up 17%. Asia Pacific grew the most, only $557 million, but it grew 27%. And that probably is a lot of the growth for a lot of these tech companies, especially cloud service companies or e-commerce type companies, is Asia Pacific. So you've got Southeast Asia with the Philippines and Thailand and countries like that are still growing, that aren't really third world, but they're kind of borderline third, second world countries, because they're depending more on either military or tourism or something like that. Their economy structures aren't that strong as of yet. And then Europe growing over $1 billion, up 24%. So, of course, the Americas is going to bring the most money for them, and the Asia Pacific area is probably going to have the most growth for them. So, once they saturate this area and start to dominate Europe, you can see them to really start to dominate Asia Pacific. Or maybe they're doing it opposite. Maybe they're like, okay, we're doing really, really well in the Americas, and we're growing really good, so let's focus on Asia Pacific and hope that Europe jumps on board. I'm not quite sure. I don't know what the company upper management is thinking there. So, but if we look at their outlook for the first quarter of 2022 and the fiscal year of 2022, like I said, they do their fiscal year a little bit differently. They are looking at revenue for the first quarter of 2022 anywhere between and I did read that people weren't impressed with their outlook for the first quarter and for 2022, but they're saying almost $6 billion. I wouldn't be surprised if they hit $6 billion in revenue in the first quarter. And then for the fiscal year 2022 revenue, he is saying $25 billion, closing in on $26 billion. So I hope he gets it, not just for my share price, but because he is kind of aggressive. He is kind of making a big swing, going after Microsoft the way that he is. One of the ways that he's doing that is Salesforce, they did acquire Slack. Now that deal is not done, but that puts them in the office space, similar to Microsoft. So that's an area where they're kind of going after Microsoft. Some other numbers here that we can look at really quick here. Unearned revenue up 18%, almost $13 billion. And then cash flow, something that I like to see. Operating expenses was down. Cash flow was up 33%, over $2 billion. And then remaining obligations up 20%, $18 billion. So, but I do like to see the cash flow. They do have some debt. They didn't show it here in this chart, but I think that they could take care of their debt with no problems as the company is growing consistently with revenues and stuff like that. So one other thing that I did want to mention that I got off this website, Market Watch here, about because they are acquiring Slack. Slack actually as a business grew as well too. So they saw a strong fiscal year, reporting a record net addition of paying customers and preliminary results. That's today, Thursday. Business communications company reported the addition of 14,000 new paying customers, pushing its total to 156,000. So that's almost $360 million that they brought in, and that beats estimates of $324 million. Of course, their earnings, they aren't going to report until March 4th, but that is good for Salesforce, especially if this acquisition goes through. So, and I kind of hope that it does, as I mentioned before. So, one other thing that I did want to mention, just for those of you who aren't familiar with Salesforce, because there's a lot of ticker symbols out there, a lot of tech companies out there. Like I said, they do the customer relationship management. These are some of the companies. This is off of their website here. These are some of the companies that they work with. Some really good companies here. You can see Ticketmaster, Southwest, some new companies as Invisalign, Zillow, not a new company, but they're in there. They also have some communications. Well, let's take that ticker off right there. Internet's a little bit slow, but anyway, they also have T-Mobile, American Express in the finance section. They also have Vodafone, which is overseas in the communication sector as well too. And then they also have AAA services. So they're very well diversified with their clientele on who they are serving, and it seems to be growing as well too. So Elf here, I'm not familiar with this. It looks like a makeup line. They are helping them grow as well too. So check out the company. Like I said, my personal opinion around that 200 mark is ideal for me, just because their earnings is not earnings per share, but their PE ratio is pretty high. But if you are looking to get into this company as of right now, my personal opinion, why not? If you've got your core positions built up and you want a little bit of growth to your portfolio, they don't pay a dividend. But if you're more of a growth investor, or maybe you're like me, you're doing more of a barbell approach to investing, where you have some growth on one side and a lot of dividends paying on the other side, because I think it's nice to have a combination of both, kind of a hybrid approach to investing. Salesforce is a nice one to add, but like I said, do your own research. Don't take my own word for it. Check it all out for yourself. So hope everybody has a great day. Be safe and healthy. Mahalo and aloha.